Well, what brought my attention to your room is the title, How to Pay Off Mortgages in 70 Years.
Yeah.
So I myself don't have a mortgage, but I have a friend that actually needs help in a situation.
Mm-hmm.
He has a 30-year mortgage
Mm-hmm.
and he's had the home, I want to say at least, I know every bit of 16 years.
Mm-hmm.
And they're telling him he can't refinance the home. He's been trying to refinance it and he cannot.
Yes.
And I guess what I'm asking is, what steps do he need to take to try to get refinancing?
So why is he wanting or needing to refinance?
To lower the interest rate?
Mm-hmm. And so is it just that, or does he need a lower payment, but he just wants a lower interest rate?
Both.
Okay. Do you have any information about the loan at all? How much the
The
interest,
loan was
how much?
62,000
$62,000 when it started, or $62,000 now?
when it started.
Okay, 62,000. I'm putting this in my calculator now. I
Okay.
hope you can see this on screen. Do you have an idea what the interest rate is?
7%?
7%. Okay. Now, was it a 30-year loan?
Yes.
Okay, now here's what we're going to learn. Okay. If I can manage that payment. Okay, so right now the payment on that is just $412.49. That's just the principal and interest. That does not include taxes and insurance. Okay.
Okay.
All right. Now, here's the thing. It is easier to pay off the loan faster with a higher interest rate than it is with a lower one. Would you like to see it?
Sure.
Okay, I'm going to go over this with you and I'm going to kind of explain it to you, and then you can go over it in our heads. Okay. So now,
Yes.
if we take a look at this thing, we're not going to like what we see initially because we don't know how to read an amortization schedule. Okay. On that very first payment, $50.82 goes to principal. That means $50.82 pays down the loan. The interest payment on that is $361.67. Miss Latoya, does anybody want to be
Sounds
in that
about
loan?
right. No.
No, nobody wants to be in that loan. But do you know why
Mhm.
nobody wants to be in that loan? Because we don't know how to
Why?
read it. What if
Oh,
we did? Let me show you something here. Okay. So I'm starting with payment number one. Let's call it, the first month of the year, January. And we make that first payment. And now our second payment in February, we pay a little more principal and a little less interest. $51.12 goes to principal and $361.37 goes to interest. It only comes down by 30 cents. Dang, that's not right.
right.
That's not right. Okay. Now, once you make your January payment, you don't owe anything till February, correct?
Right.
Now, your next month payment, the principal payment is $51.12, because we can see the amortization schedule. They can give you a chart that you can see this. So if you see that the next month's payment, principal payment, is $51.12, let me ask you a question. Do you have to wait to February
No.
to give the bank that $51.12?
No.
If you gave that $51.12 to the bank in January, do you know you wipe out line two? The number two payment is gone off the chart altogether.
No. Had no idea.
You paid them $51.12 early. Number two payment is gone. Number three payment has to take its place. So the payment for
Mhm.
March actually moves up one, and you got rid of payment number two for $51.12. Guess what happened to that $361.37 on line two? Guess what happened to that?
What happened?
It went away. You never have to pay it. It got canceled.
Oh, wow.
Yes. Now, I'm going to use this same loan. Okay. I'm going to lower the interest rate on this loan to what we can get. Now, if your friend didn't get a refinance, he might be in a better position. But don't tell the banks. Okay. That's why I'm whispering. They might hear me.
I know that's right.
Okay. All right. So I'm going to duplicate this thing. We're going to do the same 62,000. I'm going to drop that loan. I'm going to drop it to 3%.
Okay.
Now, anybody who would want that says, man, so I go from $412 to $261. Ooh, who wouldn't want that? $261 going to principal and interest on the same loan at 3%. Okay. But when I look at the very first payment, my principal payment is not now $50, it's $106, more than doubled. So if I want to get rid of one whole payment now, it doesn't take me $50 now, it takes me $106 to do the same work to get rid of that one payment.
Oh, okay.
So is it easier to come up with my $50 or is it easier to come up with my $100?
The 50?
Exactly. Because once you know what happens when you prepay, you see, we've been paying
Right.
extra on loans for years, haven't we, Miss Latoya?
Yes.
We
indeed.
just didn't know what happened when we do. Has anybody ever explained it to you?
No, sir.
In school?
No, sir.
At the bank?
No, sir.
Do you think now that you're listening to it, do you think somebody should have told us what happens when we pay extra?
Absolutely.
Because when you give your money, you're buying something, aren't you?
Right.
You're buying time savings, you're buying interest savings.
Mhm.
We've been taught over the last 88 years how to
Mhm.
give the bank money and not ask what we just bought.
Right. Right.
All of us. Listen, I don't care what you do for a living. I don't care how much education you have. All of us use loans the same way because we all have access to the same information when it comes to these loans. Practically nothing.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.